Before we start this broadcast, I need you to do me a favor. Open your wallet, pull out a $1 bill, and look closely at George Washington's eyes. Does he look disappointed? Because he should be. If you still think that piece of green paper in your hand is money, I have bad news for you. You are about to get a brutal lesson in physics and economics. Turn off TikTok. Put down the TV remote. The cats on the internet are fine, but the global financial system is not. We are standing in the middle of a phase that historians won't call a recession or a correction. They will call it a world war. Today is January 28, 2026, and the battlefield is no longer theoretical. It is mathematical. An unprecedented event is unfolding. The price of silver in Shanghai is trading $20 higher than in New York. A financial black hole is sucking the wealth of the West and transferring it to the East, and in the next 15 minutes, I'm going to show you how China is using capitalism's own rules to crash the US dollar forever. In a normal world, an iPhone in New York costs the same as it does in London. A barrel of oil in Texas costs roughly the same as in Tokyo. That is the law of an efficient market. But today, that law has been suspended. We are living in a split reality. Look at the two numbers defining this war. In New York, on the COMEX, what I call the Western Bank's paper casino, the price of silver has been smashed down to a miserable $106.15 per ounce. If you are a US investor, you're panicking. Oh God, the bubble popped. But you are wrong. That is the fake price. Let's teleport 7,000 miles east to the Shanghai Futures Exchange, SGE, where people actually take delivery of real metal to build missiles and solar panels. What is the price there? $126.95 per ounce. Do the math with me. 126 minus 106. The spread is $20.80. In the world of arbitrage, a 1% spread is a fortune. But 20%, that isn't an opportunity, that is a financial black hole. It is a giant vacuum cleaner with a suction force strong enough to bend global logistics. Imagine you are a silver refiner in Switzerland. You have a 1,000 ounce bar on your desk. Phone line 1 rings, it's a banker from New York, I'll give you $106. Phone line 2 rings, it's a trader from Shanghai, I'll give you $126. Who do you sell to? You don't need a PhD in economics to answer that. You hang up on New York, block their number, and put every ounce of metal you have on a plane to China. This is the mechanism of the drain. China is executing a strategy that is both brilliant and ruthless, the paper dragon strategy. Beijing knows the West is addicted to suppressing metal prices to hide inflation. They know the Fed is terrified of rising silver prices because it signals the death of the dollar. So China is using that against us. You want cheap prices? Fine, keep it at $106. We will pay $126 and clear out your entire vault. China is using Yuan paper money they can print for free to exchange for physical silver, a finite strategic resource. They are trading the infinite for the finite. When the music stops, when the monetary system resets, who wins? The one holding the pile of paper or the one holding the pile of metal? The answer is obvious. But Wall Street aren't idiots. They see the vaults draining, they see the ships turning around, and they have launched the dirtiest counterattack in the financial playbook, the margin weapon. Last night, the CME Group quietly hiked the maintenance margin for a single silver contract to an insane number, $51,977 per contract. Let me explain how brutal this is. Normally, you only need about $10,000 down payment to control a 5,000-ounce contract, but now they are demanding 5 times that amount. Imagine you are a speculator holding 100 contracts. Suddenly, you get an email, wire us an extra $4 million in cash before the market closes, or we liquidate your account. You don't have $4 million lying around. You are forced to sell. Thousands are forced to sell at once. The result? The price on the screen freefalls. This is a controlled demolition. They deliberately painted a giant red candle on the chart to scare the weak hands. They want you to look at the screen and think, oh no, silver is crashing, I better sell. But here is the fatal flaw. This trick is useless against China. Why? Because the People's Bank of China doesn't buy on margin. They buy with cash. When Wall Street smashes the price to $106, they are accidentally putting up a clearance sale sign for Beijing. China just buys even more with the same amount of money. Wall Street is burning the furniture to heat the house in the middle of a blizzard. When they can't win with economics, they switch to psychological warfare. Open your phone. Bloomberg, CNBC. Financial experts who haven't mentioned the word silver in 10 years are suddenly writing articles telling you to sell now. Silver is a trap. It's just a pet rock. Do you think that's a coincidence? No, it's a script. But the rule of survival in an information war is this. Ignore the guys in suits selling paper. Listen to the guys in hard hats melting metal. We have just received a leaked memo from Pamp Suisse, the Rolls-Royce of the bullion world. In this internal memo, they didn't say demand was soft. They used the phrase, demand at levels never before seen in history. Their foundries are running 24/7. Workers are on triple shifts. Wholesale orders are backlogged until April 2026. What is the paradox here? The factory can't produce enough to sell, yet the price on the exchange is dropping. That is the blue screen of death for the financial system. The computer says one thing, reality says another. The $106 price tag is a lie, and when price no longer reflects supply and demand, the market is dead. Why is this happening right now? Why January 2026? Because the dam has broken. The DXY, the index measuring the strength of the US dollar, has officially crashed below 96. The dollar isn't just losing value against silver, it's losing value against everything. Down 14% against the Swiss franc. Down 12% against the euro. Central banks around the world are hitting the sell button simultaneously. China has been waiting for this moment for a decade. When the DXY broke 96, they knew the US was out of ammo. If the Fed raises rates to save the dollar, the economy collapses. If the Fed cuts rates to save the economy, the dollar collapses. It is checkmate. China is simply walking in, clearing the board, and taking the pieces home. So what is the script for the coming days? The rubber band has been stretched too far, and when it snaps, it won't be gentle. The COMEX in New York has only two choices left, and both are poison. Choice 1. Admit defeat. Let the price float to match Shanghai. Silver gaps up to $130, $150 overnight. The short-selling banks go bankrupt, but the market survives. Choice 2. Keep fighting. Keep using margin to suppress the price at $106. If they do this, the physical inventory goes to zero. They will have to declare force majeure. When that phrase flashes on the screen, the price of silver doesn't go to $130, it goes to no offer. You won't be able to buy a single gram, no matter how much paper money you have. We are watching a game of chicken between the Federal Reserve and the laws of physics, and trust me, physics always wins. That $20 gap must close, and it won't close by Shanghai coming down. Why would they lower their price when they have the cash and the goods? It will close by New York exploding upwards. My final advice to you, do not let this volatility shake you out of the market. Do not let that $51,000 margin hike scare you. That is not the roar of a lion, it is the scream of a wounded animal running out of ammunition. Do not hold cash. Cash is the victim in this war. Do what the victors are doing. Hold the metal. Let the banks play their paper games. You sit tight, brew a cup of tea, and wait for the inevitable morning when the COMEX breaks and the true value is returned to the world. I am Channel Name, and this is a broadcast from the economic trenches of 2026. If you don't want to be the next victim of the dollar, like, share, and subscribe immediately. I'll see you on the other side. 40.23. That is the number that should concern every investor watching this channel. It is the Shiller P ratio of the S&P 500 as of January 2026. The only other time in history we witnessed valuations this disconnected from economic reality was in 1999. Moments before the dot-com crash vaporized 80% of the Nasdaq. But if you believe 2026 is simply another cyclical market correction, you are missing the forest for the trees. We are not just staring at a recession, we are facing a convergence of four systemic failures: a sovereign debt death spiral, a commercial real estate implosion, a consumer credit collapse, and a geopolitical stranglehold on critical resources. While the mainstream financial press distracts the public with narratives of a soft landing, a silent, brutal war is being fought in the shadows. It is a war between the US dollar and physical reality. It involves the strategic maneuvering of China, the desperation of the Federal Reserve, and the one asset that stands at the intersection of industry and monetary history, silver. Why are central banks hoarding hard assets while encouraging retail investors to buy overvalued tech stocks? Why is the paper price of silver stagnant while physical vaults are being drained at record rates? Today, we analyze the mechanics of the coming collapse and why the world's largest institutions are fleeing into the metal that the system is trying desperately to suppress. To understand why the metals market, specifically silver, is primed for a historic repricing, we must first dissect the macroeconomic fire burning down the house. The narrative for 2026 is not based on speculation. It is a mathematical certainty, driven by four converging crises. First, the commercial real estate cliff. We are witnessing nearly $1.5 trillion in commercial real estate debt maturing. Between now and the end of 2026, these loans were originated in a zero-interest rate environment. They now need to refinance at double the cost. Simultaneously, office vacancy rates in major U.S. economic hubs have exploded to between 20% and 30%. The collateral is impaired, debt service payments have doubled, and the regional banks holding these loans are technically insolvent. This is not a liquidity issue, it is a solvency crisis. Second, the concentration trap. The equity market has become a dangerous hallucination. A handful of companies, the so-called Magnificent Seven, now represent over 30% of the S&P 500. Investors are paying 40 times earnings based on an AI boom that mirrors the 1999 internet bubble perfectly. The market is pricing in perfection in a world that is fundamentally breaking apart. When this concentration unwinds, there is no diversification to save the index. Third, the consumer breaking point. The U.S. consumer, the engine of the global economy, is exhausted. Look at the auto loan market, the true leading indicator of consumer health. Subprime auto delinquencies have hit their highest level since 1994. Repossessions are skyrocketing. When Americans stop paying for their vehicles, their only means of getting to work, it signals that they have already maxed out their credit cards and depleted their savings. The consumer has no capacity left to absorb a downturn. Fourth, the sovereign debt doom loop. The U.S. national debt has breached $38 trillion. Interest payments on this debt now exceed $1 trillion annually, surpassing the entire U.S. defense budget. The government is borrowing money simply to pay the interest on previous borrowing. In 2008, the Federal Reserve could print its way out because inflation was low. In 2026, with inflation sticky and debt to GDP at 120%, the Fed has no ammunition left. This vulnerability has not gone unnoticed. Across the Pacific, a rival superpower is capitalizing on this weakness, making a move that could shatter the US dollar's hegemony. This brings us to the core of today's analysis: the silent economic war between the United States and China, and how it is quietly cornering the silver market. The China strategy: dumping debt, buying resources. In 2008, China helped stabilize the global economy by purchasing U.S. debt. In 2026, the strategy has inverted. China is shedding U.S. treasuries at a rapid pace. By selling U.S. debt, they force yields higher, increasing the pressure on the U.S. government's interest payments and destabilizing the American banking system. This is a form of financial asymmetric warfare. But where is that capital going? It is not sitting in cash, it is flowing into physical commodities. Beijing understands a fundamental truth. In a sovereign debt crisis, the entity that controls the resources dictates the terms of the new economy. They are aggressively stockpiling gold, but more strategically, they are securing silver. The industrial monetary paradox: silver sits in a unique position. Unlike gold, which is largely hoarded, silver is consumed. It is the most conductive metal on Earth. You cannot have the green energy transition. You cannot have massive solar farms. You cannot have electric vehicles, and you certainly cannot have the advanced microchips powering the AI revolution without massive amounts of silver. We are currently facing a super squeeze scenario defined by three factors: the supply deficit. For 5 consecutive years, global silver demand has outstripped supply, mines are depleting, and ore grades are falling. We are literally running out of accessible silver at current prices. The paper illusion. the spot price of silver is largely determined on the futures market, where billions of ounces of paper silver, contracts with no physical backing, are traded daily. This mechanism has kept prices artificially suppressed, creating a false sense of abundance. The physical drain. While the paper price lags, physical inventories at major exchanges like the COMEX and the LBMA are hemorrhaging. Strategic accumulators and industrial giants are taking delivery of the metal, removing it from the system entirely. The corporate and banking maneuver. We must also look at the behavior of the major Western financial institutions. For years, banks have held massive short positions on paper silver. While this appears to be a bet against the metal, a deeper analysis suggests a different motive. Price suppression allows for the accumulation of physical metal at a discount. As the 2026 crisis accelerates and the US dollar loses purchasing power due to the debt spiral, capital will inevitably flee from financial assets like stocks and bonds into hard assets. Gold is the primary monetary shield, but silver is the volatile, high-utility asset that benefits from both industrial panic to secure supply chains and monetary panic to escape currency debasement. We are seeing a scenario where the green agenda of the West clashes with the economic warfare of the East. Western governments are mandating a transition to renewable energy by 2030, yet their high interest rate policies have crushed mining investment. China, controlling a vast portion of the processing capacity and supply chain, is tightening the noose. By squeezing the physical availability of silver, they gain leverage over the West's technological and energy future. The year 2026 marks the end of a 40-year debt supercycle. The soft landing narrative is a psychological comfort blanket designed to keep the public invested while institutional capital exits the market. The convergence of the commercial real estate collapse, the sovereign debt crisis, and the bursting of the AI equity bubble creates a massive liquidity vacuum. In financial history, such vacuums are always filled by tangible value, commodities, land, and precious metals. The suppressed price of silver is the calm before the storm. The depletion of physical inventories, combined with the strategic accumulation by China and industrial giants, suggests that the paper pricing mechanism is on the verge of breaking. When that link snaps, price discovery will be brutal and rapid. The question every investor must ask themselves is this: when the credit cycle turns and the banking algorithms freeze, what do you actually own? Do you own a digital promise from a government drowning in debt? Or do you own the essential physical assets that the future economy requires to function? The warning signs are flashing red. The debt is unsustainable, the consumers are insolvent, and the East is buying what the West is selling. So 2026 will not just be a crisis, it will be the greatest transfer of wealth in our lifetime. The only variable left is which side of the transfer you will be on. Stop everything you are doing. If you are watching this, you are witnessing the definitive end of a financial era. While the mainstream media was busy obsessing over political theater in Washington and distracting the masses with bread and circuses, the tectonic plates of the global markets just shifted in a way we haven't seen in over a century. On January 7, 2026, the impossible happened. A financial event so profound occurred that it marks the violent birth of a new monetary order. Silver, the element argentum. Number 47 on the periodic table, a metal mocked for decades as the poor man's gold, just flipped Nvidia in total market capitalization. Let that sink into your bones. Nvidia, the poster child of the artificial intelligence revolution, the darling of Wall Street, and the supposed god of the 21st century tech boom, was just run over by a freight train of physical reality. For 15 years, we have lived in the everything bubble. We were told that data was the new oil, that AI was the new religion, and that physical assets were merely pet rocks left over from a primitive past. But as of this morning, that narrative didn't just crack, it shattered into a million pieces. The smart money, the sovereign wealth funds, the central banks, and the billionaire family offices has officially pulled the plug on the digital illusion. The great rotation from pixels to atoms has begun. This is not a drill. It is a declaration of war between a debt-based paper system and a resource-based physical reality. Today, we dive into why the $80 silver you see on your screen is the biggest bargain in human history, and why the March delivery cycle is about to trigger a global financial force majeure. The catalyst for this earthquake began during the early hours of the Asian trading session. While New York was asleep, a massive wave of institutional buying flooded the markets, pushing silver's total market capitalization to a staggering $4.65 trillion. In one swift move, it eclipsed Nvidia, reclaiming its throne as the second most significant asset class on Earth, trailing only gold. But the real story isn't just the price, it's the systemic failure occurring in the plumbing of the market. We are currently witnessing a run on the bank in the physical silver market. To understand why this is a crisis, you have to understand the COMEX calendar. Historically, January is a non-delivery month, a ghost town where trading volume is low and almost no one asks for physical. Metal traders usually roll their paper contracts forward to March. However, 2026 has broken the script. In the first 72 hours of January, 4,697 contracts stood for immediate physical delivery. That represents 23.5 million ounces of silver being drained from the vaults in a month where nothing was supposed to happen. This is the equivalent of a massive line forming outside an insolvent bank at 3 a.m. The data shows that J.P. Morgan, the custodian of the world's largest silver hoard, was forced to issue over 60 delivery notices in a single day. They are raiding their own strategic stockpiles just to keep the lights on and prevent a total market default. The paper wall that suppressed silver for 50 years has been breached, and the smart money is no longer asking for cash settlements. They are demanding the bars. The geopolitical squeeze, silver as a weapon of war. Why is silver suddenly the most hunted asset on the planet? It is because silver is the Achilles heel of the modern Western economy. We are currently in the midst of a great resource war between the United States and the China-led BRICS Plus. bloc. China has realized that they don't need to win a hot war if they can win the commodity war. Silver is the indispensable oxygen of the future. You cannot have an AI revolution without silver. You cannot have a green energy transition without silver. You cannot build a modern military-industrial complex without silver. By hoarding physical silver and draining Western vaults, China is effectively cornering the market on the 21st century. If the West loses access to physical silver, the Green New Deal dies, the AI data centers stop expanding, and the defense industry faces a catastrophic bottleneck. The forensic math, the great inflation lie. The mainstream media will tell you that silver at $80 is expensive. This is a mathematical deception designed to scare retail investors out of their positions. To find the truth, we must look at the inflation-adjusted reality. In 1980, silver hit a peak of $50, but what was $50 worth in 1980? You could buy a decent house for $60,000 and a new car for $5,000. Today, those same assets cost 10 times as much. If we use the government's own CPI, Consumer Price Index, the 1980 high of $50 is equivalent to $170 today. If we use shadow stats methodology, calculating inflation the way it was done before the government changed the rules to hide the truth, that 1980 high is equivalent to over $400 an ounce. At $80, silver is the only asset in the world trading at a massive discount to its price from 46 years ago. Real estate is up 10x. Stocks are up 20x. But silver is still coiled like a spring, trading at less than half of its fair value. A move to $200 isn't a moonshot. It is simply a mean reversion to historical purchasing power. See the death of counterparty risk. The flipping of Nvidia represents a fundamental shift in what investors consider wealth. For 15 years, wealth was a digital entry in a database. But as the U.S. national debt climbs by $1 trillion every 100 days, the counterparty risk of the paper system has become terminal. When you own Nvidia, you own a claim on a company that relies on the CEO's sanity, the power grid staying online, and the SEC's regulations. When you hold a physical ounce of silver, you own an atomic reality with zero counterparty risk. It does not require a central bank to print it, a CEO to manage it, or the internet to be functional. In a world of $36 trillion in debt, the only honest thing left is a bar of metal. The March deadline, a mathematical trap. The bullion banks and the shorts are currently trapped in a cage with a hungry tiger. They have sold hundreds of millions of ounces of paper silver that they do not physically possess. They assume they could always settle in cash or find metal in the open market. But the open market is broken. Premiums are skyrocketing, and the January anomaly has stripped the banks of their buffer. They are now heading into the massive March delivery cycle with an empty cupboard. If they try to buy silver to satisfy the March contracts, the price will go to $200 overnight. If they don't buy, they default. We are looking at the potential for force majeure, the point where the COMEX admits the vault is empty and tries to rug pull investors by offering devalued cash instead of the promised metal. We are no longer in a period of speculation. We are in a period of exodus. The flipping of Nvidia was the ultimate market signal. It was the moment the world realized that you cannot eat an algorithm, and you cannot build a future on debt alone. The great rotation is accelerating at the speed of light. Trillions of dollars of paper profits are trying to squeeze through a tiny exit door into the physical resource market. It is like trying to push the entire volume of the Hoover Dam through a garden hose in a single second. The pressure is explosive, and the walls of the financial system are starting to buckle. The bullion banks have less than 60 days to find metal that does not exist. They are frantically calling refineries and mines, but the supply has already been spoken for by the East. If you are waiting for a pullback to the old days of $20 or $30 silver, you are betting on a world that has already passed away. The air pocket between $80 and $200 is empty. Once the market realizes that JP Morgan is scraping the bottom of the barrel, the panic will go exponential. The masses will wake up. The fear of missing out, FOMO, will kick in, and the dealers will hang up the sold out sign. So, I leave you with one question. When the March deadline hits and the paper system finally decouples from reality, what will be in your vault? Will you be holding the pixels of the past overvalued tech stocks and devaluing dollars? Or will you be holding the atoms of the future? The script has been flipped. The silver age has begun. Secure your position now while the exit door is still ajar. This is the rotation of the century. Don't just watch it happen. Be part of it. While the world was distracted by the daily noise of political theater and fluctuating interest rates, the tectonic plates of the global financial order just shifted violently in the dead of night. On January 3, 2026, a heavy cargo plane canned from Caracas, Venezuela. It had no flight plan. Its transponder was deactivated the moment it reached international airspace. But high-altitude tracking and intelligence leaks have revealed a truth the mainstream media is too afraid to touch. 200 tons of physical silver and gold were moved directly into the vaults of Beijing. This wasn't a standard trade. This was a strategic evacuation of national wealth as the United States prepares for what many call an imminent intervention. The Venezuelan leadership didn't look to the banks or the digital markets. They turned to the only thing that retains value when the bombs start falling and the sanctions hit 100%. Hard, physical metal. This secret flight is the smoking gun of a new era. An era where the US dollar is no longer the ultimate authority, and where the great silver exit is being led by sovereign nations fleeing a failing system. To understand the magnitude of this event, we must look at the mechanics of the ghost flight. For years, the West has utilized the weaponized dollar to isolate nations that do not align with its geopolitical interests. Venezuela, long the target of these financial strikes, has finally reached a breaking point. Reports indicate that Nicolas Maduro, anticipating a total freeze of Western-held assets, decided to liquidate the nation's remaining strategic stockpile of silver and gold. This mirrors a pattern we saw in 2019 when gold was moved to Russia and Turkey to bypass sanctions. But this time, the focus shifted to silver, the indispensable metal of the modern age. The aircraft took a dark route, bypassing NATO-monitored corridors and refueling in friendly African territories before landing in China. This was a direct barter. 200 tons of bullion in exchange for Chinese technology, advanced surveillance systems, and a promise of political protection. Not a single US dollar was used as a middleman. No SWIFT message was sent. No New York bank took a fee. This flight was the first live test of a parallel global economy, where the New York banking system is entirely irrelevant. The silver deficit and the Chinese hunger. Why silver? To the average retail investor, silver is just a volatile metal. To the Chinese Communist Party, silver is the fuel of their industrial dominance. China currently produces 80% of the world's solar panels. With a global transition to high-efficiency N-type solar cells, The demand for silver has reached a fever pitch. By accepting 200 tons of silver from a desperate Venezuela, China isn't just helping an ally. They are front-running a global shortage. They are acquiring a strategic resource at a massive discount, ensuring that while the West struggles with supply chain delays, the Chinese industrial machine remains lubricated with physical metal. B. The military-industrial implication. This is where the story turns from a financial thriller into a matter of national security. The Pentagon is currently facing a silent crisis. Modern warfare is built on silver. From the guidance systems of Tomahawk missiles to the advanced radar arrays of the F-35, silver's electrical conductivity is irreplaceable. Currently, the U.S. is nearly 80% dependent on silver imports. Every ounce of metal that China pulls into its vaults is an ounce that Raytheon, Lockheed Martin, and Northrop Grumman cannot access. By facilitating this ghost flight, China has effectively conducted a strategic strike on the U.S. military supply chain without firing a single shot. In a future conflict, the U.S. might have the printing press to fund a war, but China will have the raw materials to build the weapons. See the death of trust and the LBMA precedent. The move by Venezuela is also a direct reaction to the loss of trust in Western custodianship. In recent years, the Bank of England famously refused to return Venezuela's gold stored in London. That event sent a shockwave through every central bank in the world. The message was clear. Your gold is only yours if the West agrees with your politics. Maduro's decision to move his silver to Beijing is a signal that nations are no longer willing to risk their wealth in London or New York. We are about to see a wave of repatriation requests. If several nations demand their physical metal back at once, the LBMA and COMEX vaults, already at historic lows, will likely be found empty. D. The broken mirror, paper versus physical. The most shocking aspect of this 200-ton movement is that the spot price on the COMEX barely reacted. This is the ultimate proof that the silver market is fractured. We have a paper market where banks trade digital receipts to suppress the price, and a physical market where sovereign nations are moving hundreds of tons in the middle of the night. Strategic players are ignoring the screen price. They are looking at the inventory. When the physical metal is gone, the paper market will simply cease to function. The iceberg order of global demand is finally becoming visible, and the tip of that iceberg is pointing directly at a massive price explosion for anyone holding the physical asset. E. The formation of the commodity axis. We are witnessing the birth of a new financial alliance. Russia, China, Iran, and Venezuela are pooling their resources to create a real money standard. Last month, Ghana used gold to buy oil. Today, Venezuela uses silver to buy technology. Tomorrow, it will be Saudi Arabia. The exorbitant privilege of the US dollar relied on the fact that all commodities were priced in greenbacks. That world is ending. The flight from Caracas proves that a new barter-based, metal-backed system is already operational. This is the monetary reset happening in real time, ton by ton. The ghost flight of 2026 is a microcosm of the global economy's future. The West is left with the paper, the debt, the derivatives, and the rhetoric, while the East is securing the physical wealth. For the people of Venezuela, this is a tragedy. The final looting of their national heritage to keep a regime alive. But for the rest of the world, it is a warning. If a sovereign leader, with access to global intelligence, decides that physical silver in a Chinese vault is safer than dollars in a bank, you must ask yourself, what do they know that you don't? The era of digital promises is being replaced by the era of hard assets. Possession is no longer just 9/10 of the law. In a world of sanctions and freezes, possession is the only law. As the U.S. watches its influence fly away on an unmarked cargo plane, the question remains, are you prepared for a world where the dollar is just another piece of paper? The plane has landed. The silver is gone. The gates of the old system are closing. Secure your position before the transponders go dark on the entire global economy. Is this the final nail in the coffin for the petrodollar, or can the U.S. reclaim its dominance through force? Share your thoughts in the comments below. We are watching the skies so you don't have to.